Good morning, traders. It's Tuesday, July 30th. Taking a look at the charts, we're looking at a blended of the Magnificent Seven stocks: NVIDIA, Microsoft, Apple, Google, Amazon, Meta, and Tesla. 1, 2, 3, 4, 5, 6, 7. Yep. We can see we've had a very sharp pullback here in price, a multi-wave. You could say 1, 2, 3, 4, 5 waves to the downside. And this, I think everyone always follows the big brand names. They all do the same thing. And so the pullback in these has created a lot of fear in the market. The crazy part is, if we take a look at the VIX, we've had a big pullback in these stocks, which everybody chases and tries to trade. And the VIX, because they've all pulled back, and that's what everybody wants to focus on and trade, we've seen fear shoot up because their favorite stocks are now getting hit pretty hard. But the interesting thing is we keep seeing waves of more or less lots of buying in the stock market when it comes to the smaller mid-cap stocks with this red indicator. And we're seeing also the Russell 2000 trading up near highs and pushing higher. So there is a huge disconnect of what's going on. I mentioned this in the CGS video. I mentioned it, I think, in Band video the other day. Everything is just haywire. And a lot of people are trying to get a read of what's going on. They want to know what to do. But the reality is they're just messed up markets right now. There's a lot of confusion and money's sloshing back and forth. We got economic data or interest rates across overseas, all this stuff kind of taking place. So this is a perfect time, in my opinion, to be sitting on the sidelines and protecting our capital until the dust starts to settle, until money flows and everything start to even out. But right now is definitely a very mixed signal in the market. So where we are at today, if we look at the SP 500 futures, we've had a multi-wave pullback to the 50-day, and we just need to see if this is going to be a bear flag and go lower, or if it is going to build a base and start to go higher, and if we get back long. And same with the NASDAQ. If we look at the QQQ, we've got a sharp pullback. Seems to be lots of selling, lots of heavy volume selling here on the QQQ. So we just have to let the markets work itself out and see what's going on. Now, we are seeing, again, the Russell 2000 holding in a tight bullish pattern. This rally and this kind of grind up over the past week is actually very similar to, I think, the utility space. It's rallied up and now it's grinding higher. Money is definitely moving into different asset classes. We're different class of stocks, from large caps to small caps. If we look at the real estate's had a really nice pop, has been trading sideways. This is the real estate REIT ETF. I think a lot of people are expecting interest rates to stop going up and to start coming down, which is short term is definitely bullish on the real estate market. So people are kind of front running that, moving into real estate ETF, anticipating lower rates, which means mortgage rates will come down. People will start buying homes again and drive the house price higher. I don't believe that's really going to happen. I think people are moving into these stocks anticipating that, but we are definitely seeing money move into the real estate space. If we look at the home builders, which is kind of more so like the leverage play, they're like the gold miners of the real estate space. It's already kind of started to break out of this bull flag pattern and move higher. I would say the home builders ETF are like gold miners, and the IYR, which is real estate, is like physical bullion. That's how I look at them. So we usually see the stocks, if it's a bullish, short-term bullish pattern, the stocks typically break first, or the miners, which is what we're starting to see here. And the general public think real estate is about to start another big rally and become a highly profitable thing again. I think that move is over. This is just short-term people piling into the stocks based around it. But real estate pricing is really still stuck and grinding and moving down. This is just short-term investors moving into what they think is going to be a good play. And I don't think it really will be. In the long run, short term, we still might see another push higher, but it'll be short-lived in the grand scheme of things. Now, if we go and take a look over at precious metals, we have gold and silver up a little bit this morning. Again, they're still flagging sideways. Gold pushed up to some new multi-year high or all-time highs. It's pulled back a little bit. We've had a lot of panic selling in the market with the VIX. And when there's a lot of panic, it can pull everything down with it, which is what we've seen. Silver is also pulled back within this large potential bull flag here that it's kind of flagging down. And gold miners are continuing to hold up fairly well with a nice controlled pullback towards this 20-day and the 50-day. And we'll see if we get some traction and start to see this move higher in due time as well. But again, when there's panic selling, which we see with the VIX, that naturally wants to pull things down. And it's the exact reason why in a bear market, when the tide's going down and there's huge panic, you don't really want to be holding anything. It'll want to go down in value with the stock market, including precious metals. So it's just a good understanding of when the tide's going down, you don't want to be holding on to things. It'll get pulled down with it. If we take a look at energy real quick here, we got oil moving lower today. It's kind of running towards the lower end of this kind of wedge. It is going to be haywire here. It can start to get false shakeouts and breakouts and reverse direction. I really don't like it when things go into an apex, into price action. So we'll just see how things unfold. You can see when things coil, like for example here, if we see how things kind of coil in a price action, it builds a lot of energy and you get very big moves and then go the opposite direction and then go back again. It becomes very, very volatile, short-lived, but very strong moves. And it's kind of a 50-50 coin toss of how that'll play out, which isn't very good odds. I think that's about it. If we take a look over at the overall longer-term strategy here, we are still in a rising tide environment. The market, short-term wise, has pulled back with our CGS strategy, which is why we're sitting on the sidelines. And we're just going to let this market work itself out and see where we go from there. Let's take a look at the put-call ratio real quick. No real signal showing on the put-call ratio. It is telling us that we still have more or less a bearish bias, and I kind of look at that just by looking at the 5-day moving averages above the 20-day or the 50-day. Generally, the market is struggling. When I find the 5-day moves below those, crosses below them, the market's usually starting to recover. So right now, we still have a wave of fear in the market. It's elevated, but we definitely don't have any high readings on the put-call ratio just yet. Typically, when we see high readings, the market will be putting in more of a bottom. As everybody buys put options because they think the market's about to fall, and they usually do that at the wrong time. Once you start using leverage, you're running on emotions, and you're usually trading at extremes, and you're usually doing the wrong trade. Leverage amplifies your emotions and puts you on the wrong side of the equation in most cases. Anyway, that's it for now, and we'll talk to you soon. Bye-bye.